Jade Capital Partners midweek report. Hi, my name is Rob Clayson. The Australian dollar once again attempts to break higher, but clearly was rejected today from the resistance of 75.65.80. And as you can see here, if we widen it out, that the market clearly rejects that region. If we go to the dailies, you can see still pretty much holding a firm cap there around 65.80. From the given indication of the stochastic and also the rejection we are looking for a further move to the downside, looking at 74.40 with 74.10 and the objective holding towards 73.50. Although I've been calling this level for a few weeks now, I still am under the firm belief that the markets will eventually press a lot lower, down towards 72.5, towards 71.20.40, which was outlined in the report this week. What would negate this? If we do get a break above this 75.80 level, then we could see a rally up towards, or short covering up towards 76.70.85. But I feel from this rejection, with the indicator still coming down, is that it's a clear view that the market has rejected, could end up with being a bearish outside range day, being the second, and if that's the case, then 73.50 will be on the cards, no doubt, in the next 48 hours. Well, Euro still drawn to this level of 109.50 and still looks like we will get that challenge. If you put a sort of a level here to outline it a bit more clearer, is that on the Brexit we did step underneath it briefly to recover, posted an outside range day, and ever since then it's been bearish and reaches its target. As you can see here, it got down to 109.48, I believe. In the next coming days, it still looks like this level will be challenged, and if we do get a break beneath the 109.50 level, that would expose the next objective, which comes in at 107.40.70. Fresh advances should still find good supply above 110 towards 110.60. Well, dollar yen story very much in a very whipsaw price action. As you can see here, the heavy sell-off yesterday and the retracement back today still keeps the dailies intact of a bearish trade. Now the break on yesterday at 105.40 gave the measured move down towards 103.20.60, and actually not far away got close to it. As you go to an hourly, you can see that we got down to 103.97. Now the rally, as you can see here, spikes up to the upside, and the resistance still looks pretty much intact around 106.60 at the moment, which is what was put in the outlined in the report this week. From the rejection and now trading back towards that 105.5 level, it still looks like that the dollar yen story is still very much bearish, and I'm still holding a view down towards 103.20.60 at this stage, and resistance capping around 106.60 to 107.20. The sterling, it seems to be consolidating in a band of 131.90 with the support holding around 130.25 since the Brexit, you can see here. In terms of the technical, I still feel that the market is destined to go towards that level around 130.25 and eventually lower down towards 127 to 128 as an objective from the break of 130.25. While maintained under the resistance of 131.90, we'll keep that view intact. If we get a break above 131.90, then that would see short covering up towards 132.70.90, but again, unlikely to sustain. I still feel that we are pretty much locked into that downside move, and with the anticipation of a break of 130.25 will give that move. And as you can see here, the daily stochastic, or the oscillators, are still pretty much in favour of seeing this move come to the downside. Well, the S&P breaks the trend and ever since then gone sideways, and for some odd reason, pretty much capped around 72, and this sideways trading above the key support level, which I'm waiting to see go, is at 46. Now a break of 21.46 would give measured move down towards 21.22 and reassess from there, as we could see a further fall towards 20.86. But at this stage we are overbought clearly, and it seems to do this quite a lot in the S&P, that the market is pressed onto the upside until we get that break. The trend indicator is clearly overheating, so it's just a matter of time until this market drops away from this 2170 area and look towards the break of 2146 and then down towards 2122. Well, the SPY 200, if we go into 4 hourly, does seem to have quite an impressive trend, coming in around 80 at the moment, or a bit lower, around about 54.76. A breaker there will actually see a further move to the south side and look for a target of 54.30 to 45, and it is only viewed from there that we will get the move lower down towards 53 to 53.00. Any fresh attempts, and you can see here this looks more like on a 4 hour chart of a shooting star, and if this shooting star is correct, then further weakness should come into the market and look for this move through 76 and then, as I say, lower. Any advances above 5,500, I still feel it's an opportunity for this market to get short. Well, gold story still very much looking towards the south side, and I'm still looking for this move towards the bullish foundations, which currently is holding around about 1,300. You can see here from, if I take this back a little bit, this peak, this trough comes in around about 13.00. If we get a break of 13.00, which at this stage I'm not supporting, because I feel that the market is actually starting to turn around, and with this bullish platform may again provide enough rebound to see a price rally up towards that 13.32, 33 level and higher, with 1,349 as an objective. If we do see that, then we could see the market sort of heading back up towards this higher side of the range that we saw just recently in early July. However, do note, if we go through 1,300, then the next move will be down towards 12.80 to 12.84. But I'm inclined to see a bounce, as I said, from this region and look for a bullish correction. And to wrap with oil, well, you can see here the oil has broken through that down channel, and I was looking for an objective which was around about 42.5. And if you look here on an hourly chart, we got down to 42.30 overnight, while maintaining underneath this down channel. Still puts further risk to the downside, and we could be looking at a possible target of 36.90 in the coming days if this pattern continues. On a daily timescale, it is very supportive that this market will move lower, and as I say, I'll be looking for this move roughly around about initially 38.20. That could come in, as I say, towards 36.90. Well, that's a wrap. Keep watch out for those levels I've mentioned, and look out for the report that comes out on Monday next week. Again, thank you for listening.